I've actually got some similar stuff to cover that Sebastiano was talking about, and I'm going to go through. I already wanted to talk today about, actually, is it the time for the return of core investors? And when I came up with the title here, I thought, oh, this is going to be great. I can not come today because I'm going to be so busy investing that money. But it's still, I think, the core market is still coming back. It's still a part of the market that has been the slowest one to recover on the investment side. But just really want to go repeat some of the case. So just a few points to cover. So the first two really on here are about the market, why invest in hotels, but also what are the risks and the challenges. And I think the last presentation summarized as well a lot of the attractions of the sector. I'll just cover those off. And then I'll move into how we can invest successfully in the space, and again, some of the considerations for how we do that, and particularly to be attractive to either core or core plus type of investments going forward. So I guess first thing, what is good news? So good news, ignoring, I've got nothing in here on geopolitics, by the way, so nothing about elections in Germany, nothing about Donald Trump, there's nothing in here about that. But interest rates in Europe have stabilized. We've seen that stabilizing now the last few quarters, and we're seeing some stabilization in yields. Are yields at the right place? There'd be a debate about that, I think. Transaction volumes haven't quite picked up, but there is a stability now in the market overall. So that's the first bit of good news. Second bit of good news is hotel valuations, and here I've shown hotel valuation index, which is the light blue line. This data comes from HVS and is sort of a blend of their overall index on European hotel valuations. And the dark blue line is RevPAR, obviously with a big dent in COVID. COVID probably saw a 10% decline in valuation, but we've seen probably most of that value recovered post-COVID because the recovery in RevPAR has been very, very strong, and it has offset the yield shift that's been going on in the wider market. So going back to the previous presentation, how we look at hotels in a wider portfolio is actually they follow a cycle, but it's not the same cycle as some of the other sectors. They provide a diversification in an overall portfolio. It's still a growth sector, fundamentally very attractive, tailwinds, great. Experiences over things, that's my main point. That is a long-term consumer demand driver. That's what's driving growth. That's what drives RevPAR up over the